Hey traders, hope you're well. Just wanting to talk to you about a potential opportunity on equities on the Dow and the FTSE on the weekly time frame. As we can see here, first and foremost, we've got the Dow on the weekly. We've got a nice high test bar here, which is really rejecting the previous high last seen November last year. This is the penultimate all-time high, not quite the all-time high. However, what is interesting about it is the false breakout here, and we can see here if we draw a level that the tail is just above the previous high last seen in November, and this could represent the top of a long-term range here. What is interesting about this as well is the fact that we've got bearish reversal divergence here, looking at the RSI setting 6. So we've got these lower lows here, which contrasts with the higher highs seen on the weekly on the Dow 30. This is a key sign to us that the strength with the buyers is getting less and less, and this is a very good indication when it comes to reversals. Now we're looking to trade this as a reversal. Please remember that reversals are 80% failures, but when they do work out, they're extremely lucrative, or can be extremely lucrative. Okay, they've got a low probability, high reward profile, and we're better at an efficient price point like the penultimate all-time high. Let's go on the monthly and really just show you how this is looking in terms of its historical performance. You can see here that ever since the 70s the Dow has gone up by and large. However, the all-time high was seen in May 2015 last year, but when we look at the penultimate all-time high, where it currently is at, last seen towards the final quarter, the fourth quarter of last year, this is still a good time to sell. This is underpinned by bearish reversal divergence on the RSI. We haven't quite got it on setting 6 on the stochastic, but that's good enough. Remember that reversals are much more likely to fail than trend-based plays, okay, but they're a lot more lucrative in profit potential typically. So your standard entry would typically be sell the break of the low here of this bearish pin bar reversal with your stop loss above the high, and just target either the midpoint for target 1 of this range here, about this level here, or at the very bottom here, like so. Okay, that would be our second target, target 2. Remember that we are still by and large an upward trend, and we are going against the overall grain. However, it is, if you look at supply and demand, a decent point where you can reasonably expect the smart money to be unloading their positions. After all, you can see that historically price hasn't really ever been this high since, well, once, twice, 3 times, all of last year really, and at the early start of, no, all of last year, my apologies, that it reached this price point. Okay, so this is where you can reasonably expect the smarter money to be unloading their positions, hoping that the retail market, the cattle, people who just jump onto trends or late comers into the market, will look to take the other side of the trade for them. Okay, so that's the Dow. Moving over to the FTSE, we have another opportunity. Unsurprisingly, you probably notice that we have exactly the same kind of setup on equities across around the world, and it's a little bit less clear cut, this one on the FTSE. We've got a bearish doji bar here. You could almost classify this as a bearish pin bar reversal, just about. The open and closes in the bottom half of the bar, and it's not really at a price extremity like the Dow is. Remember, the Dow is a lot stronger than the FTSE, but it is at a horizontal level here, an old level of support now acting as resistance. It also coincides with 50 Fibonacci retracement, and it also coincides with the fact that the 50 moving average has crossed down below the 200 and the 20 is below both of them, which is essentially what we want. Okay, and this is confirmation of a downward trend here. Alright, so we also have another clue. We've got bearish reversal divergence on the stochastic, just about. We look at either or the RSI or the stochastic, and you'll notice here that we've got a very similar indication like we did in the RSI for the Dow, and this is that lower high here, as you can see, which correlates with the higher high in price. And once again, this is a sign to us that the strength in buyers is getting diminished. So how can we trade this one? Quite simply, we can do exactly what we did with the Dow. We can place our entry just below the low here, stop loss above the high, and we can target the previous swing low. That's one way of doing it. The reward to risk is reasonable. Well, I say reasonable, I mean compared to the Dow it's not that great, but on its own, say 200 points difference between your entry and your stop loss, and we're targeting say 738 points. That's 3.69 to 1 reward to risk. If you're risking 2% per trade, which is what we typically do, that's 7.38% potential gain if we're targeting the previous swing low as our first target. We compare that to the reward to risk potential with the Dow. The Dow is okay, it's a lot stronger in its bullishness overall. I mean, we can see here that compared to the FTSE, it's at a much higher point at its penultimate all-time high. But if we look to trade the Dow, then we could get a much better reward to risk if it goes in our favoured direction. 336 points, targeting, well, close to 2,000. That's 1910 divided by 300. That's a 6.3 to 1 reward to risk trade, 12.7 risking 2%. So on one hand, if these two opportunities play, you've got much better profit potential trading the Dow. However, the Dow is the least likely to move in that direction, in the downward direction, given its strength, whereas the FTSE has a lesser reward to risk potential, and if it does go down, is more likely to go down further and faster because it is weaker compared to the Dow.